Welcome to the Move IQ podcast, where we break down the biggest conversations in the housing market with the aim always to make sure that you are informed and in control. Today, I've just been talking with Charlotte Harrison. Charlotte's the CEO of Homes at the Skipton Building Society, and she's been really insightful. We've had a good chat about mortgages, about different rates, about different levels of affordability across the country, and we've really focused the conversation around first-time buyers and some of the obstacles that they're dealing with at the moment. I think you'll enjoy this one. I certainly do. Charlotte, great to see you.
Great to see you.
There's always a lot going on in your world, in the mortgage world, isn't it? But can you just sort of spell out for our audience where things are at?
Yes, always things going on in mortgages, and it's felt like that for the past few years.
Yes.
On their steroids. But I think in a positive light, actually, because we've had base rates hit its peak last August, 5.25, or should I say we started to see reductions from then. So for people looking to either purchase, move or remortgage
As well.
I think there's a lot of attention on rates. So where is the mortgage market? What deal can I get? But hopefully, fingers crossed, good news that the trajectory's down or stable at least versus seeing them rocket back up again.
It does feel to me that there's a bit more confidence about.
Yes. Yeah, I think so. Certainly, strong start to the year, and we know that there's been stamp duty murmurings and changes. I think the market's feeling in an optimistic. I usually say cautiously optimistic, but I think it's green shoots and cautiously optimistic.
As you say, people have accepted that we're over the peak and things likely to improve from here on.
Yes. So I don't think we're expecting to go to kind of like an ultra low rate environment again. So I'm not predicting any kind of interest rates back at 1%, or they were sub 1%, weren't they? But we have seen rates starting to move down, and news from the Bank of England has been to kind of expect gradual reductions. That doesn't always mean necessarily reductions in fixed rates, because if the market is already pricing that in, because it gets factored into a cost of lenders pricing their products, but it does mean that we're not going to see them ramp back up. So I think gradual easing of rates, but not massive cliff edge reductions is what we're expecting.
Can you just talk a bit more about that? So the anticipated rate falls have already been factored into fixed rate lending. Is that right? Did I get that?
That's correct. So what happens with fixed rate mortgages is when a lender's pricing that, they have to take account of where do we think interest rates will be over that fixed period. So whether it's 2 years, 5 years or 10 years. And that interest rate is linked back to kind of the cost of borrowing, so longer term gilts. Yeah. If we believe that longer term cost of borrowing, let's say, settles for, I'm just going to make a number up, at 3% over a 5-year period, we factor that in. So if we then see expectations and the Bank of England do something different, then that will impact on fixed rates. Okay. But if it all follows current thinking, they're broadly where they should be.
It's an interesting one. I guess it keeps you all on your toes. But let me put you on the spot. If you were going to would you take a fixed rate or a tracker now?
Would I take a fixed rate or a tracker? It'd be dependent on what the price is. We are expecting that we'll see gradual rate cuts from Bank of England. So therefore, you could argue I might choose to take a tracker because I'll kind of hedge my bets on what rates are going to do. But to start off with, I'd need to say, well, what's the price on top of the base rate? Does it make sense? Because actually, if they're broadly similar, then is it worthwhile? And also, it comes into your own personal risk choice then, because do I want certainty of interest rate, that I know I can make that monthly commitment every month? And yes, rates might go down, but equally, something could happen and they go up. So it's all about personal preference, really.
It was a good answer, because there is no right or wrong.
There is absolutely no right or wrong.
Each person is in their own unique set of circumstances.
And that's why it's really important to try and speak. If you're unsure and you're not certain around your choices, that's why we'd always say speak to somebody that can get some kind of advice on that.
I was really keen to talk to you about Skipton's Affordability Index. That I know it's the second time you've done this.
Yes.
I think it's a fascinating piece of work. Can you expand on what it is?
Yes, I'm glad you've said that, because I think it's really exciting as well. So the Affordability Index isn't just like kind of other house price indices. We all know we love housing, don't we? We love homes in the UK, nation of house lovers. What we do with this is look at not only the kind of house price relative movements over time, but we're really trying to understand how affordable is it to buy and live in different areas. So the index will take into account cost of borrowing, cost of renting, utilities, household expenditure, real wages in different locations.
So can you drill down into different areas?
Yes, so the second iteration that we published in February goes down to 363 different local authorities. Right. So it's really granular data, so people can go on, have a look at, I'm a first-time buyer, or I'm a second home mover, I've got no dependents, or I have got dependents, I'm in different wage brackets, and start to then see what's kind of what does their affordability barometer, if you will, look like for the area in which they're looking to buy.
It's a really useful piece of work. How is the affordability index going to be used?
So I think really we have created this on behalf of our members because we know that there are some real challenges in the UK with people able to access housing. Now, the tool itself can be used on our website in terms of being able to drill down and look at what does it mean for me in the kind of the local authority I currently live in or want to live in or move. But really, what we're wanting to do with the data and the fact that we've been able to go so granular with this is then say, what changes do we need within the UK to make housing more affordable? And that's the kind of the uniqueness of it, which is it's looking at buying power and living power, because there's no point being able to just get onto the property ladder if you can't then stay in your home for the time period that you want to be there.
You've got to heat it, furnish it, live in it, drive to it.
Yes, exactly.
All the rest of it.
Yeah, and we want people to be able to live and enjoy being in their homes.
Do the challenges vary across the country quite significantly? I imagine they would.
Yes. Yeah. Oh, yeah. Yes. Exactly the case. So you can see at a general level, what the data shows is that 9 in 10 first-time buyers cannot buy in the area in which they currently live without some form of extra support.
Okay.
So if you do not have, it's typically bank of mum and dad, isn't it? But actually recently it increases to aunts, uncles, grandparents, whoever else, friends and family. But if you don't have access to some form of other wealth, it is so hard to get onto the property ladder. And then we know that in recent years with cost of living, actually people that have typically been able to help in the past, they're squeezed.
Yeah. But what's also happening, of course, is as more and more landlords sell up, the rents are rising because there's less properties for the tenants to choose from. That makes it harder to save up for the deposit.
Exactly. And we also know that, I mean, and it'll vary in different locations, but I heard some recent stats that for shared ownership properties, which are a fantastic kind of starter homes for some people and help bridge that kind of first step onto the property ladder, in some areas you've got more than 10 to 20 people ready to line up and look at the properties. You've got to be so fast with it to get there as well.
What's going to happen though, Charlotte? Where does this end? I mean, it's a worry.
It is a worry. That's why for us at Skipton, you know, this is why we've invested in the index and why we are so passionate about this, because for me, a thriving housing market supports the economy. So when we talk about, you know, economic growth on the government agenda, well, let's fix housing. And we know that they've got plans around that, but there's other things that we can do. So invest more in product solutions, make things more affordable. We know we want more housing generally. But there's no one silver bullet though, I don't think. So it needs effort across the industry to really make a difference.
Well, it's great that you at Skipton are doing your bit, but what can the government do? What are you asking them? So
we'd like no more yo-yoing on stamp duty.
Yes.
Because certainty is really important. So we know that when we had stamp duty threshold higher, and obviously we're talking now in March, and we're expecting the changes to come in April. That pushes the average first-time buyer home capturing that stamp duty from 8% of local authorities up to 32%. So overnight, it quadruples. Yeah. And that's not great for people that don't have certainty. You're already trying to accumulate mass deposit, and then you've got to find an extra £6,250. So we want some stability on stamp duty and some certainty around that.
Yeah.
We're also asking for the lifetime ISA product to be reviewed. So that's an ongoing consultation at the moment. We're having a look at that. But we'd like...
Because that has a set limit.
So there's a couple of things there. So one is that there's a set property purchase limit. So this product was launched in 2017 and the maximum purchase price was $450,000. Now that's fine in most local authorities, it's fine in most areas, but it was penalising some first-time buyers that weren't able to utilise that, and it's a fantastic product.
Yep.
It really does help people with the government bonus. So we want that to be reviewed because it hasn't been since launch, and we know house prices have increased 30% since then. But also, we're asking for the withdrawal penalty to be reduced. So at the moment, you can save up to £4,000 a year tax-free into a lifetime ISA with a 25% government top-up bonus. If you take any money out, it's a 25% withdrawal, but on the full amount.
Yeah.
So your capital's a little bit at risk. So we just want it to be whatever the government's topped up is reduced and not eating into your own
Interestingly,
savings.
when we've been filming location, we've had a number of first-time buyers at the 450 threshold going through that dilemma, and I can't do anymore. I'd love to do some more, but I'm just not going to.
And when you're encouraging savings habits, saving for a deposit isn't a kind of 2-year thing, is it? So we know that it's a long time, and if house prices are rising, we just need to make sure that the product still remains fit for purpose.
Yeah, got it.
So we'd like that to be changed.
Good to hear. Well, good luck with that one.
Fingers crossed.
So, aside from what the government may or may not be able to help with, what about lenders? How can they help? Because there are serious obstacles to people wanting to buy property, and particularly to first-time buyers.
Yeah, exactly. So innovation in the marketplace. How can lenders innovate to tackle the problems that first-time buyers are experiencing? So we know deposits are a challenge and we know affordability is a challenge. So, for example, at Skipton, we launched our track record mortgage product, which is aimed at renters.
Yeah.
There's also government schemes that lenders can opt into. So we talked about shared ownership. It can be a fantastic proposition for some people. We have things like we call our income booster. Other people do this as well. But that's around, if my affordability is not quite there, can I get some form of support to come onto the mortgage with me, but not necessarily the title deeds?
Got it.
So we don't get second home tax implications. So I think more innovation in the market to create different solutions that kind of fit your needs. Not yours, maybe.
I mean, you lenders, you're in business to lend money. You want to be able to
absolutely.
do it, and therefore being creative and finding ways to accommodate and to enable people to get on the housing ladder is important. And of course, the whole market needs first-time buyers.
Yes.
Because without them, the whole thing's
then exactly, and you just grow stand still. So no, absolutely, we want to help people, and we know housing can help in terms of long-term, financial well-being and security. So it's fundamentally important that we tackle this and we get some solutions.
It does stimulate, when people move house, it stimulates economic growth in so many other areas.
Absolutely. Yeah. So there is a win-win if we get this right, because it's not just the housing transaction, it's then estate agency fees, it's surveys, valuations, conveyancing fees, it's decorating, removals,
TVs,
everything.
The list goes on.
So so it can have a massive ripple effect. Yeah.
Well, good luck with all that you're doing. I'm really pleased that you're doing it.
Thank you very much.
Thanks for joining us on this episode of Move IQ's First Home Focus podcast. We hope you found our tips and advice helpful. Remember, home ownership may be closer than you think, and we are here to support you every step of the way. So please don't forget to subscribe, rate and review our podcasts so you never miss an episode. Until next time.